Hello and welcome back to this week's Commodity Corner. We're just going to get into it because there's a lot of stuff going on. There's a lot of misinterpretations that are probably going to be out there. So let's try and make some sense of it and see if we can put together a solid plan for this coming week. Now, we're expecting some fireworks tomorrow, which would be Monday, the 18th of August, in crude as well as natural gas. However, with clear minds and focus, the navigation should be relatively painless. So let's just start with oil right away. As you all know, the summit happened on Friday. The way I see it, and I'm sure a lot of people are seeing it, is that to a certain extent, it's basically been a big fat nothing burger. There's really no clarity on what's going to happen. It's very much up in the air. There's a meeting that's going to take place on Monday between EU leaders as well as Zelensky to discuss what happened at Friday's meeting. The tone of the press conference seemed relatively upbeat and calm and positive. However, in terms of factual action, we don't really have anything. So from Friday till today or going into tomorrow, there really isn't anything that's changed. So for that reason, oil may get some kind of movement, a little bit more book squaring, a little bit more movement, but I think everybody's still in wait and see mode because, again, really nothing has changed up until this point. So let's just quickly look at it. We're going to go start with the daily because that's really where we'll focus tonight. These are not RTH charts. These are full-blown 23-hour charts just to show you certain things. Now, on Friday, the market did make a new 920 and 45-day low over at 61.94. This could be in jeopardy of getting taken out. That would open up the door to $60. I think 60 as a number is irrelevant. Psychologically, I think it's irrelevant as well, but people will be focusing in on it and news stations will be focusing on it and X and everybody under the sun will be focusing on $60 as a number. Really, it's just a number. On the upside, I think if something goes wrong, we have enough juice to get us up into the 65, 67 area. If something goes wrong in terms of these talks, that's really what you should be focused on. I think your band for now is probably going to be somewhere between, and I know it's a big band, but anywhere between 60 on the downside and 65, 66 on the upside. Now, I know that's a wide area. I get it. But really, the market can go anywhere on any headline. So you really have to be careful of that and be cognizant of what's going on. I do think the path of least resistance seems to be down. So that means we probably take out 60 and then that opens up to the door for a 5 handle. That's if everything goes right and they come to an agreement and there is not just a ceasefire, but a full-blown peace, then I think oil will head lower. How much lower? Maybe we get into the mid 50s. I think then we'll have a different conversation as to where the band will be. So I would tell you, be very cognizant of headline risk. Be aware of it. However you trade, make sure that you always have your stops in and don't be stubborn. You may think that the markets should be bearish based off of the news, but the market acts bullishly and vice versa. You may think the market should be bullish and it's acting bearishly. So trade the market that's in front of you, not the one that you want. Be very cognizant of it. Let's go to the next one that's in the news. That's going to be natural gas. So let's just get this out of the way right now. There's been a lot of discussion and a lot in the news about Hurricane Erin. Hurricane Erin is not expected to hit U.S. landfall. So if you're looking to play natural gas based off hurricane news, you're doing it wrong. The last time I checked, it's producing rip currents and high surf along beaches in the Bahamas and the East Coast, Bermuda. But it's pretty much going to miss the Gulf of Mexico, which means it's not coming anywhere near Louisiana. It's not going to affect Henry Hub. So in terms of natural gas outages because of the hurricane in the Gulf of Mexico or the Gulf of America, whatever it's called these days, that's pretty much off the table. So really, the only thing you could say that would pop natural gas right now would be a technical bounce. And again, we're using daily charts. I'm not going to go bigger than that because at this point it's a little bit irrelevant. But the reality, you've been having crazy downtrend. This has been hurting a lot of people. There could be a bounce. Maybe it tries to reclaim $3. Maybe it tries to claim $3.10, or at least get back up there. That's a possibility. There is a possibility that it could just keep going lower. But again, I want to make sure I'm crystal clear on this. If you're playing it from the hurricane side of things and you're looking for a move to the upside based off of the hurricane, you're going to be severely disappointed. So just be aware of that. Let's go on to some of the other markets. It's in energy. Gasoline really was just a disaster. There's no other way of saying it. I mean, gasoline is just really just less. It's just doing nothing. That's really what it is in terms of just mindset. It's just a big, fat, sloppy, choppy mess. We're not going to waste too much more time with it. Let's look at heating oil quickly. Same kind of deal. It has been moving to the low, moving down, which does make sense because the seasonal aspect is there. However, one of the things that PPI told us was that producers are definitely paying more than and they're not able to pass it on to the consumer, which is affecting certain things, whether it be trucking and warehousing and even ordering. Maybe inventories are lowering. Let's go into some of the metals. We'll start with platinum. Platinum is interesting because platinum had that big run and it looked like platinum was just going to keep going and going. And then obviously it stopped. We are, you could say, technically bear flagging over here. There could be a break to the downside. The market is not as exciting as it was. Volatility is great. Movement is amazing. But in terms of direction, it's a little bit harder to gauge now because it really could go in any which way possible. I think a lot of things that scared people in the metal space was this whole tariff wishy-washiness. One day they're on, one day they're off, one day they're on, one day they're off. And that's definitely making people more concerned. You could say that maybe the run up in platinum, a lot of it was due to fear of tariffs. So countries were building up inventory just in case. Like you saw that to a large extent in copper going back a couple of months ago. There was that big, huge run up in copper. You could say that maybe the same thing was happening here in platinum. Let's go to silver. Silver, in my mind, looks like it's just cooking. It's just waiting for an explosive move. I do think that if it can get back up to this 39.5, $40, this thing could really ignite. I think that there's pent up juice going on in here. There is a correlation between gold and silver, and it's trading a little bit more with the way gold is, but it's definitely looking nice. I would keep it on the radar. And then obviously let's get to gold. Gold is in an interesting spot because if you look, you say gold looks like it wants to go. If you take a little bit more of a bird's eye view, you can see gold is basically stuck. Let's just make a little box over here just so you can see it for yourselves. You could see to a large extent, gold is basically stuck in this box. It's just really not doing anything. Now it's a big range. Don't get me wrong, 32.80 up to 34.5 roughly. It's a big range and it's tradable, but it's been very, very difficult on an intraday basis to trade it. You're getting a lot of false signals, false breakouts, gaps. The gaps are actually getting rather large. It's all over the place. It's very much a sloppy, choppy mess. Even if you're a gold bug, I would say there's better places to be in the metal space. Copper's better, silver's better. We'll get to copper in a second, but copper's better, silver's better. Obviously, platinum is better. Let's go to copper now, just quickly there. Now, copper, obviously, it had that huge gap down and it's tradable. Don't get me wrong, it is tradable, but it's doing a whole lot of nothing. One of the things that I look at when I'm viewing some of these commodities or in general, when I'm looking at charts, and I'm not such a chartist, but I look at the igniting bars and I try to figure out from there, where are we within those igniting bars? So let's just leave this bar alone a second. If we look, let's say, look at this bar going back to, when was this? Going back to April, you could see we had this big, huge day. And then the few days afterwards, the market just basically sat inside of it. So to a large extent, it was pretty much, you could say, like a multi-inside day based off of this. You can say multi-weeks, inside weeks, based off of this one bar. You're getting that same type of action this way also. We had this big, obviously wide-ranging bar on July 31st. We're going to leave the July 30th bar out of the way. And then you could see we're still within it. So it's technically like a big giant inside day, week, month, however you want to call it. And the action is pretty much conducive of that. So when you get like inside days, inside weeks, inside months are a little bit harder, but inside days, inside weeks, you really get very choppy, sloppy action. Now, again, I'm not saying you can't trade this and it's not tradable, because it is, but you have to keep expectations in check. Because really, if you're looking for juice and a move, you need the market to get outside of this 731 day, either on the upside or the downside, whichever direction. That should give it some juice. But for now, it's a huge range. Don't get me wrong, but your juice comes on a break of this bar. Okay. So that takes care of metals. Okay. Soybeans. Now I'll put a disclaimer out. I'm not such a huge grain person. I don't really trade them that much. I trade them when they're volatile and I trade them when they're in play, but I don't really spend a lot of time there. They don't really do a lot for me intraday. My focus is primarily on an intraday time frame. I do hold, but primarily when I'm looking at grains, they don't do much for me in terms of a risk reward standpoint. So it's not something I really play in. However, I've always been of the feeling that in terms of, let's say, the hierarchy in the grain space, I've always looked at soybeans, and that whole soybean patch is like the high beta tech of the grain space. So that'd be soybeans, soybean meal, soybean oil. I've always looked at them that way. So I always go there first. They usually have more range than anything else. It could be price, it could be whatever, but they usually have more range. So if you look at beans, had the igniting bar of a WASD. I'm not going to get into the WASD because there are people who are better equipped to speak more intelligently to it. So I'm just going to leave that on the side. However, you did have these igniting bars. So you did have your 3 days up. Now you had one rest day, then you're reclaiming. I think if the market can get above 1050, maybe we start making a move back up to 1080. Could happen. I can't see why it wouldn't. It could. Obviously, if we take out, let's just say 1026, 1025, all bets are off and we fall back down. I think on the upside, it's definitely looking good. Let's look at the soybean oils. I know some people like to look at that. There is a correlation between soybean oil and crude oil. It's not perfect. It's not tick for tick. It's not 100%, but there are times that they move in tandem. I don't know if that's necessarily the case right now. Again, I'll leave it for people who are more intelligently to speak to it. I don't specialize in that, so I'm not going to pretend that I do. With that being said, the market had a nice move. We creamed. A lot of it, I think, was based off of what happened in crude. Now we're trying to hold. We could get a gap fill over here, which would be interesting. That seems to be where the market wants to go. I would say keep it on your radar, but be careful. Soybean oil could be very difficult at times during the day. This is one last in the grain space. We'll look at soybean meal. So we're looking at a soybean meal. Just something you should realize for yourselves. Soybeans themselves don't necessarily drag up the entire space, meaning soybeans don't just drag up soybean oil and soybean meal. It doesn't necessarily always work that way. There have been times where I've seen where soybean meal was leading the pack. Just something to keep in mind. This was a stand up and take notice day on Friday. We've definitely come into this cluster area. There could be rejection over here. I would be very careful here because you could get caught in a false breakout where the market does get above this. Let's say the market does kiss to 300 and you think it's all clear, and then you buy it, and the next thing you know, it falls back down. So just, I would tell you, be careful. Have it on your radar, but just be careful. You want to see a little bit of a build out in this area and then go. Okay. So just keep it on your radar, but also be cautious. Here's wheat. Wheat has been hellacious. It's a clear break. It's clearly in a downtrend. I would say at this point, you probably bounces are shortable. So you could definitely take advantage in that regard, and be careful trying to find bottoms here. You just got to be careful. I don't pick bottoms. I don't pick tops. That's not really what trading's all about. That's not what we do. That's not what we talk about. That's not what we teach. That's not what we advocate. We don't look for that. We follow the mantra that markets that are trending and they can keep going, they just keep going. So how low is low? Who knows? How high is high? Who knows? All you want to do is just go with it. You don't want to sit and fight it. You just want it to just keep going. Be careful trying to play counter trend moves. They may work, but they may not. So just keep that in mind. So you don't want to be in the situation where you're constantly getting run over. Corn, downtrend is still intact. There's no reason to be buying this. If you're going to do it small, it's just right now, it's obvious that the move is down. We should be careful there. Now, I realized that this video was a little bit longer than normal. I wanted to cover a lot more markets today. just because there's a lot going on in the news. So I apologize for it being a little bit longer than normal. Normally, I like to try and keep them in the 7 to 12-minute range. This one's a little bit longer. But thanks for watching, and we'll see you on the next one.